How good is social media at predicting the stock market? BreakingCall.com's Brian Egger is the author of the upcoming book, Social Media Strategies for Investing. He joins us now to talk more about the topic.
Nice to be here. Thanks.
All right, so this has literally become a business. I mean, StockTwits is basically the biggest name, but there's so many other names in the space now, from GNIP, Estimize, Dataminer, many more. Give us a sense of the landscape.
Well, the landscape is rapidly evolving. What we're really seeing is, first, one big trend is social trading, where a lot of companies are facilitating the ability of investors to piggyback on the trades of other individuals. We're seeing more integration. Twitter, for example, recently announced it was buying GNIP, so that's a major force of integration in the sector. And also more mobile platforms, as one would expect. We're seeing platforms like StockTwits being used through tablets and smartphones.
And there's two basic different approaches to this. Can you explain?
Correct. Well, you have, first of all, the crowdsourcing websites like StockTwits and Estimize, which really make their money by selling their API, or their application programming interface, to data vendors and developers. So that's why you see, for example, the StockTwits trending tickers show up on Dow Jones MarketWatch. And then the other major model is the data analytics companies like GNIP and Dataminer, which market their refined Twitter data to algorithmic traders and hedge funds and high-frequency traders.
So what's the business model for these sites? I mean, who's really paying them?
Well, again, in the case of a StockTwits or Estimize, it's really either the media outlet or the developer that purchase access to the API, and that's exactly the relationship they have with the Yahoo or Dow Jones. In the case of the data analytics firms, the data science companies like Dataminer, it's really that end trader, that algorithmic trader, that hedge fund that is purchasing this data with the hope that they can get and maybe an early read on breaking news.
So for an investor, right now it seems like social media has gotten so noisy.
It has.
How do they cut through that?
There are a number of things they try to do. They buy this big Twitter firehose data, they ingest it all, and then they eliminate duplicates and spam. They try to verify the location and identity of the Twitter messenger. They try to weight, based on social media influence, the clout scores of these individuals. And they also subject all this data to linguistics analysis to determine whether or not it's a real signal or not.
How prevalent has social media become as an investing tool?
It's become bigger and bigger. And one of the estimates is that some 60% of financial bloggers use Twitter as their primary news source. Another data point is that 2/3 of public companies actually have a presence on StockTwits, so they're using it as their venue of first choice to communicate with investors.
So we know that. How good is social media at predicting where a stock's really going to go?
Yeah, there is some evidence. The evidence is in some cases mixed, but one study shows that the bull and bear indicators on StockTwits are actually significant predictors of the stock price returns for stocks like Apple, Google, and Microsoft. That's a major example of the predictive ability of these venues.
And what about figuring out who is better at it? I mean, those sites sort of talk about the volume and where the general bull direction, general bear direction. But in terms of individuals, are there stars emerging?
Well, there are. I'll give you an example on Estimize. I mean, Estimize, which claims that their estimates, their crowdsourced estimates, are more accurate than the Wall Street consensus 67 to 77% of the time. They clearly rate people. They have stars within their group that are more accurate predictors. So within each of these social communities and platforms, there is a weighting or ranking system.
So finally, where do you see this going? Will these sites all kind of aggregate among themselves? Do you see winners emerging among them?
Yeah, I think there will be consolidation. I mean, we did see that, for example, with Twitter buying GNIP. There are a lot of apps out there. We have app overload in many cases, so a lot of these apps based on smartphone and tablet platforms, there may be some consolidation, but it's becoming more and more prevalent. The two major trends are that individuals are increasingly turning to social media to learn about the stock market, and that companies are using social media as a venue to communicate with investors.
What about investors really using it, though, to make those decisions, not just get the information?
Right. Well, they increasingly are. They increasingly are. And again, it's based on the incidence of. One example is that 25 to 30% of individuals say they have made an investment decision based on what they first saw on a financial blog. So all the other vetting that goes along with it takes place later. But blogs, which are part of social media, as an example, are becoming a major source of decision-making input for investors.
All right, it's a growing trend. Thanks so much for coming by.
Nice to be here.
Our thanks to Brian Egger. He is author of the upcoming book, Social Media Strategies for Investing. I'm Bobby Rebell. This is Reuters.